This is Arise News. We interrupt this program for a live event.
Me to unpack this discussion, starting with Mr. Thiono Habib Han, who is the Chief Executive Officer of Shelter Afrique Development Bank. Let's welcome him with a round of applause. Then I also have on my panel Mr. Bernard Mono, who is the Director General of the East African Development Bank. Ms. Marlene Goy, who is the Chief Executive Officer of Fund for Export Development in Africa, FEDA. Ms. Nados Bekele Thomas, who is the Chief Executive Officer of the African Union Development Agency, NEPAD. Yes, you can join me here, madam. You can go that way, if it's easier. And then we also have Mr. Benjamin Mugisha, who is the Chief Underwriting Officer of the African Trade and Investment Development Insurance, ATID. Welcome him. Then Ms. Hope Moreira, who is the Managing Director and CEO of PTA Reassurance Company. Welcome here also. Then last but not least, I've got Mr. Ken Agogovia, who is the Chief Operating Officer of the African Reassurance Corporation. Wow, this is quite a handful. I'm privileged to have slightly more panelists than the previous panels. So I was joking that they were supposed to be 8, actually. So when we couldn't find the other one, I said, please don't look for him. Yeah, so to start off, I think, let me start from my right. I'll start with Mr. Ann. Please, from the very basic, why did this alliance has to be formed? What was the objective and the purpose for it?
Thank you very much, my dear friend. So, first of all, I would really like to thank the Afreximbank for taking the leadership to organize this session and dialogue, and given its pivotal role in continental leadership in the space we are looking at. And also, I would like really to take the opportunity here to pay special tribute to our forefathers that allowed institutions like ours to exist. You just played a very emotional video of the late Babacar Ndiaye, who was one of the first president of the African Development Bank, who had this amazing vision of creating institutions that are African-owned and focusing on African priorities. So I would like again to have a round of applause for Mr. Babacar Ndiaye for that great vision. We need leaders like that to really change Africa. And also really tribute to some of the visionaries that allowed such an alliance of African multilateral financial institutions to exist. It's also in the name of Professor Orama, Benedict Orama from Afreximbank, who really was very instrumental in getting us all on board to actually create this alliance. So this alliance is really the fruit of a lot of discussions and observations around the global financial architecture, and to basically realize that Africa was lacking that coordination among institutions like ours, the multilaterals, and we needed to officialize or have sort of like a pretty solid coordination of our efforts to drive the agenda of development, despite the fact that we are all in different other sectors. So the founding fathers, founding institutions of the Alliance of African Multilaterals are Shelter Afrique, Afreximbank, AFC, TD, Africa Re, TDB, ZEPRI, and then we've been joined also by other institutions like FSA. I think so far we are about 10 African multilateral institutions. And the vision for us is really to drive African development and impactful investments by strengthening our capital and our collaboration, not only from an investment perspective, but also from a knowledge sharing and capacity building, and also partnerships in different developmental agendas. So in a nutshell, the Alliance of African Multilateral Institutions is something that was needed. But again, it's never too late. And we started it 2 years ago, and it was really chaired by the African heads of states on the sidelines of the African Union Heads of State Summit in 2024. So it's exactly a little above 1 year now. And we celebrated the 1 year anniversary last February in Addis Ababa on the sidelines of the same African Heads of State Summit. So it's just telling you that this was an initiative that has been held at the highest level, highest decision-making level of our governments, the same way they created the African Development Bank and then allowed the African Development Bank to create institutions like ours. Today, we stand here to have such an institution also created by the same heads of state and supported by the same heads of state, because there's a need to have that one voice and one purpose to drive African economic development.
Thank you. I think that's very impressive to see, the spirit of unity amongst institutions that sometimes there's a possibility that they could have been competing, but coming together with a common goal. I think that's very, very impressive. So let me turn to my left here, to Malini. You are in FEDA, and I'm sure since yesterday, and even before that, the issue of capacity has been mentioned. I listened in the opening remarks of the VP in the morning. She mentioned that the capacity or the capitalization of African MFIs is only 70 billion, which is a small figure in terms of capitalization, looking at the need that they are supposed to meet. What sort of challenges has these presented? Whilst it's an opportunity on the other side, that there is more potential to grow, but it's a bit threatening. We can see that the issue has been one of the major points raised in why these institutions should not be considered the same way as other international institutions.
Thank you very much for the interesting question. Is the mic on?
Yes.
You can hear me? Beautiful.
Yes, yes.
Thank you for the interesting questions. I'm going to even add to the challenge that you described. Not only when we look at all of us combined, are we capitalized at levels that are quite modest when we compare it to global level. That's one thing, but also when you look at the trends in the market today, what are we seeing? We're seeing international banks exiting the African market. We're seeing donor fatigue. Some donors, all of a sudden, are saying, we're no longer going to be able to do what we used to do. And if we do certain things, we're going to do what we want to do. So we're seeing all of these trends, and that should remind us, all of us, and I think that that's the basis for the collaboration, which is it's very important that we remain resilient. It's very important that we control our own destiny. We cannot depend on what's happening outside of Africa. Another trend that I'm adding is we're starting to see certain of the trade bases being challenged. It's important that we trade more with each other. So I do think that it's the good news about everything that's happening is that it forces us to understand we need to be stronger. The reason why we are together is because for two things. Is number one, we're able to do syndication, so combined balance sheets. So when we're looking at projects, more and more we want to do projects that are transformational, that are a catalyst for change. And we all realize that one institution cannot do that. For these ambitious projects, we have to come together as a syndication. As my colleague mentioned also, we have a lot of complementary skill among these panels. So I'm Feda, I'm the CEO of Afreximbank investment platform. So we're able to put in equity into projects. You have the traditional bankers who are able to put debt together and syndicate. You have the insurance company, the reassurer. All of that is very important. And then people who help us a lot on policy as well. How do we work on policy to make sure we have the right framework to do that? So that's already very good. But one thing that is important is we're going to need scale. When we look at the opportunities that exist on the continent, and all of the trends that I mentioned, which is donor fatigue, international capital exiting, it is very important that we strengthen our capital, our ability to intervene. And how can we do that? We have to start calling, and we were talking about that at dinner yesterday, we have to start relying on the capital that exists in Africa. We do have capital. There are pension funds in Africa that have capital. We have sovereign funds in Africa that have capital. We have insurance companies that collect every day from Africans and that have capital. So it's important that we become very conscious to say that capital has to be put to work to strengthen the institutions that are there for Africa and Africans throughout cycles. In good times and bad times, we're always going to be there. It's important that we're strong to be able to continue to intervene. It's important that we're strong to continue to do things that are impactful and create more wealth. And so all of these ecosystems are very important to be put in place. I'll stop here.
Excellent point. Excellent point. Excellent point. So before I leave that point, I remember over the past 2 years, there's been an issue on sovereign wealth funds that are not kept in institutions like yours, but our central banks are taking these, sovereign wealth funds are taking this money outside. Just one phrase, what assurances can you give to these institutions?
I say, please look at, have trust in yourself and in ourselves. Look at our track record, at the level of performance that we get. Look at our background, who we are. Everybody here is very experienced, with decades of experience in Africa, of doing, quite frankly, quite well for all of the colleagues. A lot of us came back to Africa from, I started on Wall Street. I decided to come back to Africa after graduating Harvard because I want to have an impact on my environment. So let's please have confidence in ourselves. Let's look at statistics, at actual results, because sometimes people view ourselves, we view a risk that doesn't exist. I say, look at my numbers. In the next few days, I will be publishing my annual report. I guarantee you're going to be very happy with what you read and see. So let's have, please, confidence in each other to understand that if we don't do these simple things, such as using the capital that comes from Africans, from African people, from African companies, to continue to promote our own development, we're not going to go very far. So I would encourage the central bank to keep the money here in Africa. I would encourage the general public to keep money here in Africa, to invest in your continent. The same for sovereign fund, the same for insurance companies. And I would like for that to be supported by policy. Because oftentimes there's a lot of people who want to do it, and they will say, well, it's the policy that blocks me. Let me tell you very simple, that's what everybody else does. So when you look at pension fund in the US, they have an allocation that they do internationally because they want to diversify and they look for a return. But most of their money is used to develop their economies. It is the same in Europe, the same in Asia, the same in India. So let's please, we're not reinventing the book here. Let's please do the same here in Africa. We are the continent with the most potential, but I know that everybody in this room is tired of hearing potential. We want to now have realities that are there and have a revolution across the board. Thank you.
Yeah. Thank you for that point. So I'm saying this because I know I've got many friends in central banks. They are the most risk-averse people. They always want to keep their money where there is next to zero risk. Yes. I don't know if that place exists, but let me move to you, Benjamin. You know, the issue of capacity has been raised. And I've seen another number that African MFIs have deployed about 200 billion in, over the past few years. It looks big in terms of the capacities internally, but compared with the international MDBs, this is a very small figure. Do you think, so that's why this characterization is too small has been advanced. Do you think this is a fair and accurate measurement on the impact and success of African MFIs?
Thank you. Thank you.
Yes, okay.
Yes, it's not a correct conclusion. Small does not mean not impactful. The person who's saying these institutions are small should go and ask the 60,000 SMEs that EADB supported in East Africa. You should go and ask the women and the youth whose businesses were supported by East African Development Bank in East Africa and tell them, no, this institution is too small, so the impact that you got does not make sense. I think it's not correct. The small as we are, there's a mandate that we fulfill. We wish to grow, and of course, that's an ambition. We will grow given time, but where we are, it does not mean that we cannot make impact. Actually, being the local institutions, we know where the need is, and we can address those needs more appropriately. What is required is not characterizing somebody as small, but working together, collaborating. And I think, the more I hear of this is, I think of a neighbor asking somebody, no, your child is not as strong as mine. Just kill him or starve him so that you depend on my son. Instead of telling the neighbor, please feed your son so that he's as strong, and then the two together they can work and we have more impact. So I think, in conclusion, it's not fair. It's not a fair judgment. There is an impact we are making, and we will grow given the support from our shareholders and other stakeholders.
Very important point. I think very interesting analogy of recommending to kill your own child so that we can look after the stronger one. Yes, but it's undisputable that it's an issue that needs to be interrogated with sanity. So let me come to you, Your Excellency. NEPAD, it's an agency responsible for capacity, and capacity is the issue that we are bringing to this conversation. Where does NEPAD fit in the alliance?
Well, I will start by saying that, NEPAD has graduated to be the African Union Development Agency with, of course, the spirit of the NEPAD, the New Partnership for African Development. Building new partnership is of critical importance. The most important thing is, if you recall, we had the review of the first 10-year implementation plan of Agenda 2063, and we realized that it was only 37% of it that was implemented at the end of it. And we started really asking ourselves why this is so. And among the many things, structural things, one of the problem was the financing of it. And therefore, we just then zoomed to really looking at the financing. There was the decision, 35th Ordinary Session decision, which created a development fund, but we didn't want to create a fund for creating a fund. So we wanted to really look at the landscape of all the financing that is there, all the funds that exist, and therefore we did a feasibility study. This was one, a real new thing for the African Union. And based on that, then we realized that there is a niche for having a development fund. A development fund, not just a fund for itself, is not just the money, but it's really a fund that will create that platform that is required for political leaders to be speaking to and with, consulting with, the financial institutions, the private sector, and also the development practitioners. And that platform is of critical importance because in the past, financial institutions speak to themselves, and then, the political leaders speak to themselves, and we develop plans without really involving all this. So creating that platform was of critical importance. And there has been a breakthrough, a historic breakthrough, with the AU president, the chair, President Lorenzo, calling the African multilateral financing institutions, the association or the alliance, the AMFI, to come and to really discuss this fund, and therefore together to come out with a fund that will work for Africa. So that is where we are. And this has been really historic because, it's not the policymakers that can create a fund and manage it. That is a mistake. It's been a mistake. It doesn't work. It will not work. But it's the institutions that have the expertise that could really manage this fund. And also, this is the institutions that will look at the critical elements that they can fund from the projects. Our job is really making sure that the risk is mitigated, that there are guarantee funds, the policies are put in place, the development of projects, pipeline projects are there. So this is where our niche comes. But more than that, there was a need to really look at the entire financial architecture. The financial architecture that looks at the ecosystem that is there for the financial institutions and, their interoperability of the various aspects of this. The rules, regulatory frameworks, the facilities, the entities, the institutions that would allow Africa to finance its own development and with less dependence on other external financing. And we sort of think that would center around. We've started developing the concept note with AMFI. It would center around looking at examining whether this development finance backbone is there. How do we strengthen it? And that's where the strengthening of AMFI, the capitalization of AMFI comes very critical and very important. Then to look at also on how we can scale up what we have as monetary, payment, infrastructure, which is run by Afreximbank to cover the 55 countries, so that 55 countries can really transact in their own currencies without depending on the dollar, on US dollar. The third one is to have an integrated capital market and also look the asset management, rules and see how bonds could be listed in all these various, things, and also standardize the rules in a way, and maybe have a Pan-African, the Pan-African sort of rules, regulations that govern that, harmonized rules and regulations that would govern that, including, the Pan-African yield curve benchmarks to be established, and, risk management and insurance layer, is critical and very important. Yes, we have them, but we need to really see on how we can reinforce them and how we can sell them up. Is very critical and very important. So, because there are shocks and there are things, how do we make a continent-wide guarantee mechanism like the EU has? We have to think of that. And finally, is really our role, which is really making sure that the policy, the governance is put in place, not to control, to facilitate these MDBs. It's very important that we have all these clearly put in place, and we're suggesting with AMFI to really sit down, not only just the financial institutions ourselves and the political leaders, to look at these holistically and put in place an architecture of financial infrastructure and architecture that works and that is fit for purpose for Africa. Because mind you, yes, the $70 billion of AMFI will not suffice. Our needs, are enormous. The second 10-year implementation plan has a cap of $3 trillion if we really want to really meet and realize the moonshots. And, for this to happen, we should all work together in unison, like you rightly said. Thank you very much.
Thank you, Excellency. Reaffirming your support for the alliance. So let me skip to Hope, since we are still on the issue of capacity. How do we reinforce the capacity, especially in the area of capitalization?
Thank you very much. There are three ways to look at that. There is a very important
I'm not sure if it's your voice or it's the mic.
Oh,
maybe you can speak up a little bit.
Hello, is that better?
Yes.
That's better.
Thank you.
Okay. So there are a number of ways from the insurance perspective how to look at capacity, right? One, there is something very important called insurance penetration, right? What is the contribution of insurance to GDP? If you see on the African continent, we are still talking about 1% versus 10 times in the developed markets. This is critical in the mobilization of savings, because this is what ends up going into the funding process, the funding funnel. So what is happening around the capacity there? We are very fragmented. That is point 2. We are not able to deal with the issues we have, which are getting bigger: climate risks, right? Infrastructure risks, because we are very fragmented regulatory-wise. You find that in any one economy, you cannot actually write across the border. You cannot provide capacity for across the border. So what does that mean is that we remain small in our small ponds, right? So some of the things we have to address will have to be, how do we harmonize? And I think Her Excellency did talk about it, regulations and open up markets, because FCFTA trade cannot happen unless we have services in open up, the insurance open up. So that restricts, even whatever capacity we have, we can't do it cross-border. The third thing is the disconnect between credit and de-risking. If you think about the SMEs that my brother did talk about, the funding into SMEs is dire, right? It's critical. But they are seen as the most vulnerable, the most risky. So we have the capacity around de-risking SMEs. So through AMFI, we are also trying to link credit and de-risking mechanisms through insurance. So all these, at the end of the day, ramp up the capacity. But unless we're able to really go over the regulatory issues, the fragmentation around the markets, the fragmentation around where you can invest, even the pension funds and insurance companies, then you find that we are very restricted. We are happy about things that are happening. With Afrexim, we've launched TABA, which is a Trans-Africa Bond Alliance, and the idea is to write trade bonds across Africa. So you see, now you start getting beyond, and that is a power that the Africa Matlato institutions have. So we need to keep doing those initiatives, and I think that is the reason we are all in AMFI, and then we can start talking about creating capacity at the continental level. Thank you.
Oh, thank you very much for that. So, yes, you can give a round of applause. That's a very profound suggestion. I think very practical also. Yeah, so let me come to the two gentlemen who are involved in the practicality of this work. So I will circle back to part of the conversation that was had earlier on the PCS, the preferred creditor status. You sit in the underwriting business. How does, so this PCS issue is very close to home. How does this make your job easier or complex? Yes.
I think that's for me.
Yes.
Thank you very much. So happy to take this conversation. If you look at what we are doing on the insurance and guarantee side, what we're trying to bring to the market is, and it's been mentioned in this conversation and in previous conversations, is to bring a mix or a blend of different liquidity options to the African continent. So starting out with foreign direct investors, whether it's equity or debt, looking at Africa, they're looking at two perspectives that our institutions can help to address. The first one is risk, and by risk, we are talking about either risks that are perceived from a country perspective, when an investor is looking at a country, or risks that are perceived from a counterparty perspective. And guarantees and insurance help to address those risks. But they're also looking at regulations. So where they are regulated, and for example, international banks are regulated, the regulators have put in place limits that apply on a blanket basis across counterparties based primarily on ratings. And in that conversation, institutions like ours are bringing to the table our rating, and our rating is a very big driver of a pricing differential. So a government or a corporate or a financial institution that is raising capital in the international markets is looking to benefit from ratings from African financial institutions in order to deliver a pricing differential on that fundraising. And I think that speaks to Bernard, my namesake's comment around size, because in that conversation, size is not the main driver, it's impact. PCS is a very, very important component of that conversation, because in order for these investors to take confidence in these institutions' sustainability, PCS is a very, very big component in that conversation. So I would say it's not possible to dilute the relevance of PCS, because it does signal the importance of African financial institutions in this infrastructure. Having said that, beyond that PCS then comes the counter-cyclical role that we play. And in that counter-cyclical role, it should be understood that sometimes we are stepping into a gap because no one else can. And again, in order to provide that counter-cyclical support, it's buttressed by the PCS that we benefit from. So I would provide those two as, as my contributions to that conversation.
Oh, that's important, very important. Yeah, so let me descend on the Chief Operating Officer. So I will not confine you with a specific question, but based on the discussion we are having here, in the practical work environment that you face on a daily basis, what will be your perspectives?
Yeah, thank you very much. I think as the Chief Operating Officer of the premier reinsurer in the continent, I see firsthand the immense potentials as well as the vulnerabilities within our system. And it is here that AMFI has a vital role to play. Let's be honest. Potential or lack of potential is not our problem. Africa has a lot of potential. The challenge is what mechanism can we put in place to enable or bring that potential into action? How do we fund our system? How do we have confidence in ourselves? So, in my view, and this is what I am aware AMFI is pursuing, they have, like you would have observed, working with those in the insurance and reinsurance space. Because if you don't have someone giving you comfort, you will be scared to put your investment. So, Amphi is already working with some of us. Another is, how do we get long-term funding? How do we mobilize not only donations or donors, not externally, but even within Africa? I think someone alluded to it. We have so much we can get from within. And thirdly, how do we have the confidence? What is made in Africa is as good as what you make from anywhere else in the world. You know, we were talking about this yesterday. I mean, we talked about the need for integration. We working together. I mean, each one of us, I believe, are accomplished. We've done a lot for ourselves. I can speak for Africa, which I was sharing with some of my colleagues just last Friday. In 40 years working for Africa, I have seen a lot of development. With premium income of about 44 million, then we have crossed the $1 billion threshold. We were just waiting to dissolve, say, another white elephant from Africa. But today, we rank amongst the top 40 globally. But talking about confidence, which I think is more important, we were looking to them to give us protection. But today, many of them are coming to us for protection. I believe with what Amphi is doing, us coming together, taking our destiny in our hands, we are on the right track. And I believe with confidence that we will be getting from Africans, because you must respect your own for others to respect you. We will soon be getting that same confidence globally. Thank you.
Very profound thoughts. I think we generally share the same sentiment. That's why you can hear the applause from the crowd. Yeah, so with you, your parting shots, if you were sitting in the African Union and you have heads of state in front of you, in one phrase, what would you tell them? If you were sitting in the African Union and you have heads of states in front of you, what would you tell them about the issue of capacity? Briefly.
Yeah, okay. Capacity, from our own perspective, in terms of financial capital, you stand to gain when you bring all together than working in isolation. Whatever any one of us has accomplished, if we work together, we definitely would have multiples of whatever we are aiming to have. So let's come together as heads of missions, heads of states, work to make it work.
Oh, excellent. I think the message is very we need to work together. We need to collaborate and come up with a consensus of position. Before we run out of time, so let me just give each one of you your parting shots. We are left with 9 minutes, starting with Hom.
Really, for me, my message would be make the single market happen, right? Stop the talk. Let's get this to happen. No single economy has grown without having a large market. Today, India is a powerhouse because of its numbers. So that is what I would tell our heads of state. The FCFTA needs to happen yesterday.
Absolutely. I think if we had time, I would have asked you how or what is lacking, what is slowing down the single market to be or to come to life.
Well,
to people who are not experts on this issue, just in simple terms.
Well, there is a whole framework and roadmap. So things have been studied and done and put on paper. It's about actioning. It's about stopping, having our little toughs. I mean, yesterday he was saying, we were talking to the insurance people and saying, today, if you're in Kenyan market, why wouldn't you allow a Kenyan insurance company right in East Africa? And then you move on to the next market and the next market. So whereas we say we don't have capacity, 60% of African risks go out. We cannot access them. I cannot access a risk in Morocco because of regulatory issues. Once we have a market that allows capital to flow, that allows services to flow, that allows skills to flow, then we'll have a difference. Thank you.
Very important. Thank you for bringing that, because sometimes the impression created, in the general context is things are moving, and these practical challenges are not, aired as often as they should be. But thank you for mentioning that. Yes,
Thank you. If I was to sit in front of the heads of state, I would be talking about scale. How can we go from thousands to millions to billions to trillions without the private sector? And how can we give confidence to the private sector that we are actually open for business if we actually put barriers to business in place? For example, international banks are able to lend on the basis of rules and regulations that are internationally accepted, but we constrain our own financial institutions from being able to benefit from those rules and regulations. So how do we expect to compete when we shoot ourselves in the foot in the space of regulatory frameworks and, taking advantage of lessons learned? I think in the morning we had from the Asian experience. So I would be talking about, if you want to provide the opportunity for scale, then you need to also change the way you look at the opportunities that exist in the financial infrastructure.
Thank you. Thank you for that. Your Excellency, you host the Forum of Heads of State every year. So the message from the Alliance is we hand it over to you to repeat this, to reinforce it, that the Alliance needs capacity.
Yeah. In actual terms, this has been already reinforced, and that's why the AU chair, President Lorenzo, called the AMFI members and told them that he would like them to operationalize a fund that works for Africa, and also really to see that it is fit for purpose, and to see the African infrastructure and structure and the architect and the systems work for Africa, so that the locked $1 trillion in insurance, in pension, in sovereign wealth really feed into the roads, into the digital infrastructure, into all the things that we would like to see for Africa to prosper, into health, so that African future generations live in dignity. So, it's a very important thing. We've already started working, walking the talk. And I think, what we need to do is to reinforce and to come in unison, to come together to make it happen.
Yes, again, thank you, Excellency.
Thank you, Excellency. So this panel was very transformational for me, because I just had a thought, just listening to all of my colleagues, is I used to think that Africa was ill-perceived outside, and that the problem was to change the narrative so that the world could see the potential and would bring in the capital, and then we would get going. But now I realize that the first thing that we need to do is to actually create confidence within Africa. So if I spoke with the head of states, I would say, it's within Africa that we need to create the confidence. I would want the regular African who has a job, the retail investors, to have confidence in their system, to keep the money in Africa, the high net worth individuals to do the same. I would want the institutional investors, sovereign fund, pension fund, insurance companies, central banks, to say, I'm going to keep money in Africa, and not just in my country, in Africa. I would want the businesses that are prosperous to say, let me expand, let me take advantage of the AfCFTA, especially the strong countries that are already ahead, the South Africa of the world, the North Africa of the world. They're best positioned to go and capture some of these opportunities that AfCFTA offers. So I do think that until we have all of our stakeholders, the general public, businesses, institutions that have confidence in Africa, it's almost, we can't ask the outside world to have it. So this is where I would start. And then another thing that I would say, because I think that, we do need capital at scale to transform the lives of our people and to capture the full opportunities. I would say that the one thing that capital will always follow is return. So the minute you take the money and it comes back with a return, that's what people like, and it will keep floating. And so I think that all of us have a responsibility to be successful, to talk about it, to publish it. That's why I say I will put my annual report on LinkedIn for everybody to read and see. And I would encourage us to continue to change the narrative altogether. Thank you.
Very important, very important point. Very important. Just to buttress your point that I always use platforms to advance this, that capital will still come to Africa, but at a high cost because of the narrative, because of the assumption. But there is a clear reason why all the Eurobonds or all the sovereign bonds issued in Africa are oversubscribed. It speaks to the fact that capital likes Africa, but at a high cost, of course. Let me come to you, your parting shots.
Yes, thank you. I mean, I'll tell them the solution is in your hands. You have the institution. Believe in them, give them an opportunity to work, capitalize them where they need to. Whoever is coming, just try and make sure that they work with your institutions. Don't just rely just to the external players and ignore your own institution. Just to borrow maybe the words of the Professor Kishore earlier on, MPH. There's something that was done somewhere, it worked somewhere. What happened to China and Asia, that their multilateral financial institutions are multi-times our size? Let us see what they did, come and also do the same. It's progressive, it cannot happen overnight, but it's a process, intentionality to do it. And again, maybe also to open up. Let us think of Africa as one. I know a number of people who went to Asia or went to Europe to come to Nigeria. Why should that happen? Why can't we flow within Africa? Because that's where trade happens, that's where investments happen, and it's only believing in ourselves.
Absolutely, absolutely. Yes, let's conclude with you.
So I started by saying that AMFI was actually championed by the heads of states. And what I would just say when I meet the heads of states again, to report back on what they have created, this Alliance of African Multilateral Financial Institutions, is to say execution, execution, execution. We have great plans. We have the Agenda 2063. Which started, I believe, 2013. So it's a 50-year plan to see the emergence of Africa. We need to accelerate that plan. And that plan was crafted by the heads of states, right? So now we have AMFI, which is an instrument to help accelerate and execute on the plan. So what we would say would be that today we left with 38 years. We have 38 years to go to get to 2063. And I think everybody is pretty much agreeable that the first decade, 2013, 2023, of the Agenda 2063 is pretty much not as expected. We were expecting an annual growth rate of 7% of the African states. We only achieved about maybe 4% to be optimistic. So meaning that for the next 38 years, if we were to achieve the goals that have been set at the beginning of Agenda 2063, we need an average growth rate of 8%. So you have 1% additional growth rate that you need to add to the 7, which was the original assumption, which we are very far from achieving. So to get to the 8%, we really need to accelerate the execution of the plan. So today we are at the crossroads, unprecedented shocks, high cost of funding, as we all know, and this is not the time to weaken African institutions. It's actually the time to strengthen them, strengthen their capital, improve their credit rating by great support from the different governments. We need an African-led response to shape a resilient and self-reliant development ecosystem. We cannot rely anymore on external financing sources. I mean, we see what's going on around the world today. Our destiny needs to be defined by African priorities. So we need to move now from coordination to co-leadership of AMFI members and really focus on execution and results. The foundation has already been set by those who had the courage to imagine a unified African financial viewpoint. So now our collective responsibility is to build on that vision, operationalize it, institutionalize it, and pass it on to the stronger generations that will come after us. So Africa's financial destiny, from our perspective, will not be written in distant capitals. It will be written in Abuja, here, in Nairobi, in Conakry, where I'm from, in Cairo, and Joburg, and other places on the continent. And also across all our institutions represented here and beyond. So through our shared resolve and unity of purpose, AMFI will actually help us all realize that destiny. Thank you very much.
All right. What a note to conclude this panel session. You can agree with me that this was a profound discussion, and you made my task much, much easier. But ladies and gentlemen, these are people who are sitting at the helm of institutions that are entrusted with changing the financial architecture of Africa. I know they might look like simple faces, but they are doing a very complex job. Let's give them a round of applause.
Thank you very much. And a round of applause to Dr. Meshack Mutize, lead expert on credit rating at APRM, for managing that panel very well. We have another panel for you, but before, don't move, don't go anywhere. But before we do, we want to show you a little video. We made a video of yesterday. See if you can spot yourself in this video. Roll the video. Ladies and gentlemen, dignitaries, on behalf of Afreximbank, it's my distinct honor to welcome you to the 32nd Afreximbank annual meetings. And we're here in Abuja, where Afreximbank's story began.
The experience of Afreximbank, and indeed the continent over the past 30 years, gives us optimism. Having exhibited resilience in the face of adversity, we can leverage Afreximbank's experience to chart a path for the future.
Where they seemed there was no opportunity, Afreximbank has created for us and for itself. Put your hands together for the Afreximbank.
It is high time for us to leverage the common heritage we share to build together a prosperous and sustainable future.
The African Life Sciences Foundation is more than a fund. It's a powerful, enduring platform that will catalyze African-led research, improve healthcare outcomes, and ultimately uplift our underprivileged communities.
We'll see you back bright and early tomorrow morning. Thank you.